You need a, oh wait, oh yeah, full screen then. No, 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 no. You full screen us.
Ready?
Yeah.
What are you seeing?
I see the full thing now. No,
Good.
hold on. Well, it's gonna show me. I don't know if you're in. Okay, I'll go back. Now you can start. Oh, hold on. Okay. Hey guys.
How's it going, everybody? Thanks for joining us.
Yeah, my name is Amber Lane. I am with Keller Williams, and we are so excited to have you guys tonight.
Yep, and I'm Blake Bogese. I'm a mortgage lender with JG Wentworth Home Lending, and ready to kind of get this process started. We're in the Verona Library right now. We're sitting beside each other, even though it looks like we're in different rooms, but we're right here together. And if you guys have any questions, just ask us on the poll below in the GoToWebinar, and we will try to field them as we go along. So with that, let's get started.
Not yet. I just want to make mention that keep in mind, Blake and I have worked really, really hard to bring you this webinar. We are compiling basically a 6 to 8 week process into about 50 minutes. So it's a lot of information. And the great news is that it's our job to keep up with all the time frames and all the things that need to be done and the big checklists. And so, you know, don't feel frustrated that you can't remember it all, or don't put pressure on yourself that, you know, you have to know it step by step by step. That's what we're here for. And while we want you to be educated, we want to give you some stress relief, because this is a pretty big process. This is going to be one of the biggest investments of your life. So one last thing too before we get started is that one of my favorite things about real estate is the answer is never no. Just because you might not get pre-approved right this second doesn't mean next month or in the next 2 months or later down the line you would not get approved. Credit's always changing, so the answer is never just a straight no. It's always, let's get some work done and then you can buy a home. So that's what I love about this business. All right.
All right, so we're going to walk you through. I'll take the webcam off.
Yeah.
There we go. So you guys just see the slides now. So we are going to walk you through these steps. We are going to talk about before you search for your home.
And then we're going to get you to find the perfect home.
Amber will walk you through writing an offer and negotiating the terms.
Then during the first week after writing that offer, we're going to go through the loan application and the inspections.
And then what to expect during the inspection, negotiations, and processing.
Then we have the appraisal and underwriting after that.
And then after that is the other inspections and satisfying all the conditions.
Then we'll resubmit to underwriting and get final approval.
And then the final step is the walkthrough and getting the keys to the house. We really want to make sure you guys understand the process so you can ask the right questions and not feel stressed out by this. If you know what to expect, then the process isn't stressful. It's just a matter of time before you close your loan.
Yep. Very good, very good. So one of the first steps is finding a lender and finding a realtor. And in terms of finding a realtor, it is important to find somebody that lives and works in the areas that you want to purchase in. For me, I was born and raised in Richmond in the Tri-City areas, so that is the only areas that I service. Communication is a big, big key. You want a realtor that communicates really well. Let's talk about experience. You want a realtor with experience. Now, I'm not talking about years of experience. I'm talking about actual deals. As long as they have a couple deals under their belt, you know, they have a feel for what's going on and what is needed in the process, that is the kind of experience that you want. Someone that's knowledgeable about the market and what's going on is really, really important. You really want to be looking for a consultant versus a salesperson. You don't want to be sold into a house. You know, finding the perfect home isn't about somebody selling it to you. It's about somebody educating you about the process and letting you make the best decision for you. And then the greatest part about finding a realtor is your representation is absolutely free. You do not pay a realtor to represent you in this transaction. That is paid for by the seller. And so, yeah, you actually get free representation. It's okay.
Sorry about that. Hit the wrong button. So, like Amber was talking about, finding a lender is very, very important. There's a lot of lenders out there, and there's a lot of online companies. And I can only reiterate finding someone that is local and that you can know, like, and trust. When you search lowest mortgage rates online, you're going to get thousands of responses on Google. There's thousands of people that advertise the lowest rate. But what does it really cost you? At the end of the day, the most important thing is to have your loan close on time. You need to be able to ask the question, what does this rate cost me? What are the closing costs? What's a realistic closing date? And you need someone that's going to communicate and keep you in the loop, and that you can trust that they're providing you with the right information, and that if something comes up, that they can work around those problems. Effective communication really is very, very important. And if there's a problem, that a lender can work with all of the parties to get a solution figured out. That is probably the most important part of finding a lender, is someone that you know, like, and trust, that's a local person and that is realistic about all of the expectations to be set forth. So going forward, the first thing you'll do before you start your search is your pre-qualification. So your pre-qualification, your loan officer is going to gather your information, basic stuff like your name, date of birth, social security number, where you've been working, your employment for the last 2 years. How much money you make, what type of assets you have in the bank, and where you've lived for the past couple of years. And what this information allows them to do is to start gathering what type of loan product is best for you and thinking about certain things. So the first thing you would do is we would pull your credit. And when we pull your credit, 90% of lenders look at your FICO score. Credit Karma gives what's called a Vantage score, which is not a FICO score, and that's why there's such differences. A Vantage score and a FICO score have different criteria that give us that number. The FICO score, the most important part is your payment history, your utilization ratio. That means the total money amount owed on a credit card versus its limit. And then the things that are less significant are the length of time, the new credit, and the types of credit. That makes up your credit score. The credit report also gives you your monthly debt obligations. This shows how much other money you are obligated to pay on a monthly basis and what other debts are going out the door. Things like your minimum payment on your credit card, your car payment, your student loans. The last thing is your income. Whether are you hourly or are you salary? Are you W-2 or are you 1099? Things like overtime and bonus, commission, and someone that's self-employed need to have a 2-year history on that job. And you have to take the average of the last 2 years. So that's what's really important, to look at your qualifying income versus what your take home is. Anybody who you use as income as a co-borrower or a borrower, you have to use both people's credit scores, and you take the lesser of those 2 credit scores. So that's why it's important to go through this process right there. Once you go through, you have a credit score, a qualifying income, and assets in the bank. Either you're going to be pre-qualified, or you need to do a couple of things. Maybe you need to improve your credit score, and we need to work on some things, pay off some debts, or give it more time. And that's where our experienced loan officer can look at your credit report and offer advice. Maybe we need more time on the job, so you can get that pay raise, or you can use more overtime to have more qualifying outcome, or maybe you just need to save some money for a down payment. That's all. You just need to save a little money. So after you're pre-qualified, the next step is to become pre-approved, and there's a difference. Pre-qualified, you tell me everything, and I say, yeah, you could buy a house for this amount. Pre-approval is trust but verify. And why is this important? Because it makes you a stronger buyer. I will ask for you to send me some of these documents, so your pay stubs or W-2s or tax returns, to make sure that the way you're telling me the income comes in is how it's going to be read by the underwriters and the guidelines. Once we are certain that all of the information that you've told me is correct and we can go forward, then we'll start talking about things like your loan type and what is best for you. There's all kinds of different loans. Conventional loan is for people that have really high credit score, that are looking to put higher money down payment. Then you have a whole host of government loans. Government loans, you have a veterans loan, which is a VA loan. You have rural housing, which is USDA, which is in a lot of areas outside of Richmond and the surrounding communities could qualify for rural housing. You have a FHA loan, which is a Federal Housing Administration loan that has more lenient credit underwriting and also has a lower down payment standard. And then if you needed grant money for first-time home buyer, that's offered through the Virginia Housing Development Authority, or the VHDA. So what loan is best for you is based on a whole slew of factors: your credit score, what you're looking to get out of it. Do you want a fixed rate or adjustable rate? What's your term? The amount of money you put down. My goal in this process is for you to understand exactly how much to expect, a down payment, your total cash to close, and your monthly payment, so you're confident to go out in the marketplace and look for homes and understand, well, the difference in this home versus this home, what's it going to do to my budget? What you may qualify for and what fits your budget are two different numbers, and you need to be aware of both of those things. So just because you can afford a $300,000 house, do you really want to have that on a monthly basis? Those type of questions. And this is where I would discuss all the fees with you that are associated with closing costs, entitled What to Expect. The whole goal is to have no surprises and to be completely upfront right here. So once we've talked about your loan type, and we verify all your documents, that's when you would get into a pre-approval. Before we go to the next step, though, I do want to make a point about what you see for monthly payment. So here's an example on the screen. When you go to online mortgage calculators, and mainly to these websites like Zillow and Realtor.com, what they show you is estimated mortgage for a house, and it's always based on 20% down, conventional loan, and they give you the principal and interest only. So a $350,000 house on Zillow, they say estimated mortgage is $1,400, which sounds great, but they forget to put in the real estate taxes, the homeowner's insurance, and your mortgage insurance. So your principal and interest is going to be determined by the amount of money you put down, the type of loan, and your interest rate. Your real estate taxes come from your tax assessment. A general rule of thumb is 1% of the tax assessed value. Divide that by 12 months is your monthly real estate taxes. Each county has a different real estate tax rate, and your tax assessment is different than an appraisal. Your homeowner's insurance is going to run you about $720 a month on a $200,000 house. If your mortgage insurance is on every loan if you have less than 20% equity. So that would be mortgage insurance. So this is a realistic example of what a monthly payment would be on that house. Maybe a little bit on the high side. You know, these are just for illustrative purposes only. But what's important to remember, your housing is the PITI, principal, interest, taxes, and insurance. So all of those items go into your payment. So once we've gone through all of that, and you are very, very comfortable, we have a credit score, we have the income, we have the assets, we've checked everything, we've selected a loan, and we know how much you're pre-approved, and now you're a very strong buyer. The more work you put into this in the beginning, the easier it's going to be in the end, because there's no surprises again. A good loan officer is asking questions to make sure there are no red flags, allow for a smooth and quick loan process. And when I pre-approve someone, you can take it to the bank that you're going to be approved. I would be very wary of a lender who says you're pre-approved and doesn't ask these type of questions. Some people like to, online companies or whatever, they like to throw applications against the wall and see if they stick. And if a couple stick out of a lot thrown against the wall, they still make their money and they don't care. Well, local lenders in this area have a different mentality, and they want their clients to be happy, and every single person that they pre-approve means that they are going to get their loan funded and approved. So just be very wary that if someone doesn't answer these questions for you, and you go online or something and they say you're pre-approved for some really large amount, that you need to be a little wary of that situation.
And likewise, let me just add on to that, during this process, you're going to be putting up a little bit of money, so you yourself do not want to you don't want to just have your loan stick to or thrown at the wall and see if it sticks, because you're going to be investing some money as well. So one of the biggest things about pre-approvals is it really benefits you. Yes, it tells the seller that you're a really strong buyer. However, it benefits you because in the long run, it's going to save you money. You know, if you get in at a really good interest rate, it's going to give you leverage in multiple offer situations because all of your documents have already been checked, and you look like a strong buyer, and it should give you confidence going in the deal. In multiple offer situations too, I always ask my local lenders like Blake to call up the seller, and that's a really great thing about local lenders is I can say, hey, Blake, can you call this seller's agent and say, you know, Amber Lane is a really good buyer because you've already pre-approved her. Would you do that for us? And I know that they're always willing to do that to help us get, you know, win the multiple
Yeah,
offer
especially in
situation.
today's market, it is
Yes.
a seller doesn't want to go through the whole process with somebody who is pre-approved by a non-reputable company that isn't going to get funded.
Right.
So that's what they're trying to avoid. So it's nothing against you. They trust you. They trust everybody, but it's trust but verified, making sure that you're good to go.
Absolutely. So, um, once you get the pre-approval, what your realtor will do for you is set up a home search, and you'll go through kind of a consultation about what you're looking for and what you need. And there are different types of homes that you could be buying. So you could buy new construction, where you know you get the say in what gets built and how it gets built. You could go after a resale, which is, you know, a big majority of the homes that are sold on the market today, where they have a previous owner and you just buy it straight from the previous owner. Um, Foreclosures and short sales, ever since HGTV, you know, people want foreclosures and short sales because you can get really good deals. I'll tell you, there are some headaches that go along with these two, and I'll tell you why. Sometimes the process is a little bit more drawn out, so it's not, you know, sometimes it's not the typical 30 to 45 days. These are both bank-owned, or I'm sorry, the foreclosure is a bank-owned property, and a lot of times, I'm not saying all times, but a lot of times they don't do any of the repairs on a house that are needed. So if you're doing a loan that can't have, you know, molded handrails,
Missing.
missing handrails, or you know, things like that. There would have to be some way to get that fixed prior to closing before the bank would let you buy that house. Also, short sales, so basically that is an owner that owes more on the mortgage than what it is worth. And so the bank actually has the final say in whether they can sell that house or not. So for example, if they owe $200,000 on a house and it's only worth $150,000 and you're willing and able to come in and pay $150,000 for that house, the bank has to approve that, because the previous owner would still owe them $50,000. Well, that process can be months and months and months long.
Hey guys, I think we started our timer a little early because we were sitting in here, and I'm seeing that it's going to go off in 20 seconds. So I'm not really sure what that's going to do. If the broadcast stops, I will. We're going to send it back out to you and let you log back in again. So just a heads up, so we don't lose everybody. But my timer's saying like 7 seconds, so we're going to see what happens here together.
Okay.
Nothing like being live. Okay, we're still going, so we can go past. Is everybody can still hear? If you can we get a hand up or answer a question in the poll? Can you guys still hear what we're saying?
Oh, look, we're getting hands up.
All right, cool.
Woo-hoo!
All right, that's
We
great.
are still live.
Awesome. So you guys aren't sleeping. That was a trick. All right, cool.
No.
All right,
No,
cool.
that's
Thank you
not.
guys. Appreciate it. We're going forward here.
Okay, perfect. So as I was saying, the different types of homes, but then you know, we'll get started. We'll look at your search and see if you like anything. And a lot of people come to me and say, okay, well, there's like 20 houses that I could potentially see. When I do a consultation with my clients, I really want to get a feel for how they're going to live in a house and exactly what they want and why they want that, because you shouldn't have to look at 20 different houses to find the house that you absolutely cannot live without. The typical buyer actually looks at about 6 homes, and there's been multiple times, actually probably 25 to 30% of the people that I sell homes to actually buy the first house that we look at. And that's because we do that consultation prior, and we really go through and see how they're going to use and love this house. Um, the most important thing is if we're starting to look at homes and there's just not very much, or we're not finding the right house, we're going to go back to the drawing board, and I want you to give your realtor feedback, about this just isn't right. Like if I'm looking at 10, 15 homes and we're not finding the right one, we there's got to be something that's missing on all of them that can turn that down, so or turn that around. So I use a ranking system when I show homes, and basically if home number one beats out home number two, home number two is out of the question. If home number three beats out number one, then one and two are done, and three is that one. So but anyway, we can help you navigate through that. But yeah. So, also prior to, like, as we're going through the whole searching, um, the whole searching, part of this deal, I actually go over the entire contract before we ever write one. And this is for your protection and, so that you can hear it a couple of times. You'll hear it prior to writing it, and you'll hear it when you actually write it. This is so that you know what to expect, what's on the contract that we'll be asking for. This also helps us move a little bit more quickly when we need to write an offer. Right now, it's just a crazy market where buyers have to move a little bit faster, and this just ensures that you can do that. We do most of our signing electronically these days, so it's really nice. You can do it from your phone, as long as you've read the documents and understand exactly what's on them, or from your office. You don't have to come into my office or even Blake's office. I think he does electronic signing too. These contracts are forms that are approved by the Virginia Real Estate Commission, so it's not like anything that I'm writing. There are lawyers on the back end that are writing these. So, when you actually write the offer, so you've found the house, you've looked over the contract, when you actually go to write that offer, you'll be basing your offer actually off three things. So what you'll base it off of whether it's a buyer's market or a seller's market. Right now we are in a seller's market, and what that means is that there's not a lot of homes for sale, but there's a lot of buyers that want to buy homes. So that supply and demand just is a little uneven, and so sellers have it's okay. Sellers have they know that there's a lot of sellers or a lot of buyers out there, and that their homes are likely going to be sold fast. We also need to look at what the list price versus sale price is. So I'll tell you right now, for every house that's listed, on average, people are getting under 1% off of it. That's it. So on a $200,000 house, you might be lucky if you get $2,000 off the purchase price right now, just because that's the kind of market that we're in. So we want to look at that. And then, of course, we'll always look at comps and what the area is selling for and what other homes and have sold for and what their features are. So, okay. This is where we get into kind of the money that you're going to be bringing throughout this process. Remember, I told you that pre-approval, you don't just want to have some internet lender just throw a loan at the wall and hope it sticks. This is because you're putting in money into this transaction. So the first thing you'll do is put in an earnest money deposit. And what this does is it tells the seller, hey, I am serious about this contract, and I want this house, and I'm not just playing games. Normally, the earnest money deposit is about 1% or $1,000. And if all goes well and you get through the transaction, that money comes back to you at the end towards either a down payment or closing costs. And the only way that you would ever, if you would ever lose this money is if you ever defaulted on the contract. There are ways to get out of the contract, but if you got out of the contract just by defaulting on it, you would lose your earnest money deposit.
So you've written a contract, you've done an earnest money deposit. One note about the earnest money deposit is that it can be a gift from somebody else, but it needs to be a check. It needs to be traceable income. This is why I say do not use cash for earnest money deposit. That will definitely cause some problems. Not that we can't work around them, but Best practices. So once you have a written contract, that's when we can do the loan application. And that is the time that you can actually lock your interest rate. Everybody asks me this question, and you can't lock an interest rate until you have a ratified contract. Uh, your interest rate is usually good for 45 days. Sometimes they can go to 60 days. This is why a contract is written for the closing date to be about 30 to 40 days afterwards. And
Sorry.
So when you go through loan applications, you'll bring your updated documents, your updated pay stubs, updated bank statements, documents that we've already seen before. You'll bring the most recent ones. We'll go through the loan estimate, your loan application, and all the necessary disclosures that go on with a loan estimate. This can be done in person or electronically. What I find is a lot of people like to do it in person still, and that's great with me. I can walk you through and really explain the whole process. It takes about an hour. And this is where I like to explain how the next 30 to 45 days is really going to play out in turn from my side as the mortgage lender of what to expect from processing to underwriting, conditional approval, final approval to clear to close. And this is, so that's the loan application that takes place after you have a contract in place, usually the next couple of days. I think in the state of Virginia you have, was it 7 days to do loan app?
Yes,
Yes, 7 days after contract is ratified to do loan application. But the quicker we do this, the quicker we're to close.
Absolutely. Absolutely. So within 10 to 14 days, I like to write in 14 days, you will do a home inspection. This is like a 3 to 4 hour process if you have a good home inspector. For me, I give my clients a couple choices and recommend people that I've used before, and I think that do a really good job. You really need a budget about $500 for this, and it could potentially go up from here, just depending on what kind of inspections that you need to do. You might need to do oil tank inspections or chimney inspections, in which case that could take you out of that $500 bracket. But what's really cool about this home inspection is you're doing a deep dive into the home to see if the major mechanical items, the structures, are really safe and sound, and if there are any safety hazards in the home. Because you definitely want to know that going into making one of the biggest purchases of your life. From there, once we do the actual home inspection and we get the report, we're going to have to go back with an addendum to the sellers, and you have kind of 3 options. You can accept the home as it is and ask for absolutely no repairs. You can request them to actually take on some of the repairs themselves and do it before you move in, or you can always ask for a credit for the repairs. That can be towards your closing costs or a reduction in the sales price, depending on what's best for you.
So while the home inspection is going on, you've done loan application, the home inspection is going on, and in that first week to 10 days, behind the scenes, your loan officer has passed the loan to a loan processor. The loan processor is the one who sets up your file to make sure everything that's in it is correct, and it is for each loan type, that it's meeting the guidelines for that specific loan type. And double checking there aren't any necessary documents missing, we didn't miss a date, sign, or a signature on the loan application. We're making sure we have the right bank statements and all of that stuff. A really good loan processor is doing those things. And they're also doing, they're going to order documents that are needed to complete your loan. They're going to order your title work from the title company. They're going to get in contact with the person who's going to do your homeowner's insurance and getting those documents. They're going to get your tax transcripts to make sure that we didn't take your W-2s and put them on a typewriter and change the amounts. They're going to get your verification of employment. Go through your company's HR department and verify that you actually work there. She's going to order your appraisal. So that's all the behind the stuff. And as I keep saying, it all starts in the beginning. The loan officer asks the right questions. They hand it off to a good loan processor, and they are going through your file with a fine-tooth comb. They're making sure that everything is in order, that your loan is looking good, that anything that could be a red flag or anything that could be a question, we're going to answer it up front. If you have some deposits going into your bank account, we're going to get you to explain them to us up front. If there's something on your credit report that you paid off, we're going to update that. We're going to make sure that your loan is 100% buttoned up during this process. And again, this takes place during the first 5 or probably 7 to 10 days. So like I was saying, the whole goal of a good loan processor is to ensure there's no surprises when the loan is submitted to underwriting. My personal preference, I'd rather take another day and have your loan in processing than to rush it up to underwriting and open up a can of worms because we didn't do our due diligence up front. So the loan processor will be in communication with you as the borrower and myself, and it's kind of, the relationship is really good when the loan processor and their location and the relationship to the loan officer is good because it allows for easy updates and constant communications. For instance, I have my loan processor in my office, so I know where all my loans are on any given day. I don't have to call a 1-800 number or send an email to some lady I've never met before and ask what's going on with my loan and when's it going to underwriting. I have a lady that's been doing it for a long time, and we have a great relationship.
Yep. So, as like said, while you're in processing, they will actually start ordering your appraisal. Appraisal does 2 things for you. Excuse me. And it is paid by you, the buyer. Budget around $500 for this as well. And this is really one of the last things that you pay for before you close. I'm not talking about closing costs or down payments or anything like that. This is just during the transaction. So I normally tell my buyers to budget around $2,000, and this kind of wraps it up. And you pay this, depending on the lender, you could pay it up front. I think Blake and his team, you guys do it at closing, right?
Yeah, we pay it at closing, but the reason is the appraiser goes out there and he does his job and he appraises your home and we don't close the loan for any reason. It doesn't matter why it doesn't close. You as a buyer are responsible for that amount of money. So that's why most companies make you pay it up front. I make you pay it at closing, but if something happens, I would need to get paid on that too.
Yeah.
Or it comes out of my paycheck.
He does that as more of a convenience to his clients.
Yeah.
And I think that that's really, really nice to take on kind of that risk. But basically the appraisal does 2 things for you. It's going to tell your bank, whoever you're getting the loan from, if there are any repairs that need to be done per your contract type or your loan type, I'm sorry. So if FHA says that you can't have any missing handrails and there are missing handrails, the appraisal is going to come back and say you need to add those handrails. The appraisal is going to be a bit different than your home inspection just because of the fact that this is just specific to your loan type and what they require. It also gives you a value of your home. This is not a tax assessment. This is a true value of your home, which is awesome. They do it from comps, features of your house, a bunch of different things go into the appraisal, but the best part about it is you can never overpay for a home. A bank is not going to allow you to purchase a home that doesn't appraise. So that's really, really awesome. You can't buy a $200,000 house if the appraisal says it's only worth $175,000. So, which is really, really great because you don't get, you don't jump in with water, over your head or whatever that expression is. So, there are other inspections that happen during this process too. They're going to make sure that there's no termites on the house that you buy. They're going to do a well if it's a well. If the house has a well and a septic, they're going to do those inspections as well. And all that is paid for by the seller. So by this time, all these inspections have been done. Hopefully, you will feel really good about the home that you are purchasing and knowing exactly the state of the home, exactly maybe what repairs you've decided to take on once you own the home, and exactly what has been fixed when you actually purchase it.
All right, before going on, does anybody have any questions? If you do, just shoot them in the chat and we can answer. We're kind of halfway through, or probably a little bit further along than halfway through, but just to let you guys know where we stand. And after we've done all of those inspections, we have the appraisal. This is called, this is where the step for on the mortgage side is getting your loan to underwriting. So the processor has done his or her job. They've ordered all the paperwork. It starts to come back in, and they submit the loan to underwriting. And underwriting, depending on the company or your lender, could turn it around in a day or it could be a couple of days. And what they issue is called a conditional approval. And that means your loan will be approved once these conditions are met. And here are the list of the conditions from the underwriter. The typical conditions are things from third-party people, like we need to get the termite back that Amber was talking about, or the appraisal came in, we need the appraiser to upload the file, or maybe there's repairs listed in the appraisal, and we need those to be fixed. We need to get the title work back to us. We need to get the insurance back to us. Those are typical things. Sometimes the borrowers have no conditions from them, and sometimes it's minor little things. Sometimes like an updated pay stub or updated bank statement, or maybe it's a letter of explanation explaining a one-off situation. But all of those conditions are what comes back, and those have to be crossed off one by one in order to move along. So about a week goes by, 10 days during conditional approval while the conditions are getting completed. That's pretty typical. This is where you need your loan officer and your processor to follow up. I'm doing air quotes, which I think like sometimes it's hounding or bugging or emailing or calling all of the third parties so the process doesn't drag on. Everybody is busy. Title companies have a lot of different loans they're looking at. Real estate agents have different transactions going on, and all kinds of things are going in many different directions, or the borrower's out of town, the seller's out of town. This is where the lender and the loan officer really takes charge and makes sure that all the conditions are being met. If I need to call somebody to get the termite out, just keep calling. I'm going to get it. We're not going to make this process drag out because of a trivial fact. Because once we get all the conditions and they're completed, then we can submit the loan back for final approval. So you complete all the conditions, you cross them off one by one, and we submit it back for final approval. And once this happens, if everything is met, you're going to get your final approval like the next day. It happens really, really fast because the underwriter's already looked at everything else in your file. And they issue what's called a clear to close. It's the final approval. The abbreviation is CTC. When this happens, that's when the closing disclosure can go out to you. The closing disclosure, known as the CD, is basically the end document that matches the beginning document, which is the loan estimate. They look identical, the way the format is and the font and everything, and they show you the differences between what you were quoted in the beginning, your monthly payment, the minimum closing cost, every line item broken down, and the total cash to close, versus what they're saying now. So this is where it ensures you as the consumer that nothing has changed. There's no bait and switch tactics, that your monthly payment hasn't gone up and you have to bring $5,000 more to closing. You have to get the closing disclosure and you have to sign it at least 3 days before closing. So that's why it's very important to get all the conditions met so that you can have final approval. So we're just sitting back, we're waiting 3 days or 5 days before we send you the CD. It's no rush, and you're just sitting back and waiting to close. So that's why there's a lot of stuff moving behind the scenes that you might not know about. It doesn't really matter to you what those things are, but it's all about just being proactive throughout the whole process so we don't have any surprises at the 11th hour. And I go back again. It starts at the beginning with the loan officer pre-approving you correctly, the loan processor doing a great job, so that all the conditions that are listed are just little things, that there is no major issue that's going to result in your loan being denied.
I do want to touch base on and go back. As Blake was saying, when you're asked for documents or to sign those documents, that 3-day CTC rule or whatever is really, really important. But any document throughout this whole process, you don't have to memorize what comes next and whatnot, but be really diligent on trying to get all the papers and signatures back as quickly as possible. That'll make this whole process run really, really smooth. So Once you've gotten your clear to close, the fun part begins because you'll get to start your walkthrough. That happens usually a day or two before you actually close on the home. That way, you and your realtor are going to go back to the house. You're going to check that everything is still in good working order. There's no like big gaping holes in the walls. There's no graffiti. The floors are fine. There's no new defects. And you're also going to be checking that all the requested repairs are completed. So, if there was a broken window and you had asked for that to be fixed and the seller agreed, we're going to check that broken window and make sure that has been taken care of before you take possession of the home. Once you take possession of the home, you can't really ask for any repairs because you're the owner. That's who you need to be talking to at that point. So. Then a day or two later, you will get to go to the closing table. So this will usually happen at your closing company's office or your attorney's office. They'll tell you what the necessary IDs will be and how much you will need to bring to the closing table to actually get those keys. Now, the seller will not be at the closing table. They actually sign their documents prior to you as the buyer. You will get another copy of that CD, that closing disclosure that you had gotten 2 other times in the very, very beginning and then 3 days prior to this closing, just to make sure that you know all those numbers and you've reviewed them and you agree to them. You will sign your name probably 100 times and initial a couple times, and at the end you will get those keys. That house is officially yours. Yeah. Once those keys are in your hand, it's just so wonderful. It is your house. Yep.
So I hope we're kind of wrapping up here. If anybody has any questions or anything else, but I hope that you guys feel more comfortable with what to expect during the home process. It's like going to the doctor and you feel that anxiousness when you sit in the waiting room because the unknown is what is stressful. So we're here to tell you that this is how it should work. If you are going through the process and you haven't seen things like this or it seems different, maybe that's why you're stressed out. If you work with local people that have your best interests at heart, that are really trying to do a good job and they work for referrals only, then this process should not be as stressful, and you should be informed 100% throughout the whole entire process.
Yes, absolutely. A good lender and a good realtor team, our goal is to get you the best price for your house with as few of hassles as possible and in the time frame that fits your needs. Your goals are our goals, and we want to make sure that, your dreams come true on owning a home.
All right, well, we are almost done here. We just wanted to give you our contact information. If anybody needs anything, if you have a one-off situation, something unique, if we said something and it was confusing, feel free to call or text us. That's our cell phone numbers there and our email address. Either of us, Amber and I, work together all the time. So you have one, you have the other type of deal.
Yep. You can call, text, email, or even Facebook us. I'm Amber Allen Lane, and you're Blake.
Yeah, Blake Bogese. So. I think we're going to send out a survey afterwards too. If anybody is ready to get started in this process, I think we've laid out the groundwork pretty clear. We'll get you started with pre-qualification, pre-approval, and a home search set up.
Yeah, definitely.
And things are moving quick today in Central Virginia in the spring 2017. Which doesn't need to be disconcerting. It's just you need to be prepared and have all the information up front so you can make that decision really, really quickly, and you can be in the home in 30 to 40 days after that.
Yeah, exactly. And just remember, I hear it all the time that people want to wait and wait and wait because they're not sure if they would get pre-approved or they're not sure if it'll all work out in the end. And I really go back to it's never a no in real estate. It's always a matter of when. And so just reach out, get that process started, because guess what? It may not be, if you have a little glitch on your credit report, it may not be as big of a deal as you think it is. It could get, handled in 30 days. I mean, we've seen that happen. We've done deals together where, 1 to 2 months later, you're approved. So,
Yeah, I mean,
yeah.
exactly right. There's a lot of different ways to get around it. It's just the sooner you start the process,
Yes.
the better off you're going to be. If you need to buy a house in August, I wouldn't wait till July to start.
Oh, no.
You need to start early, and then you'll be prepared. So,
Yes.
really enjoyed it. Thank you guys for your time.
Yeah, thanks for coming. We really appreciate it.
Yeah, so that was
So glad
fun.
we
We'll
had a
do it
great
again.
turnout. Yeah.
Alrighty.
Tell your friends. Thanks.
Bye-bye.
Bye.